Broker Daily Uncut.
Broker Daily Uncut.
News, views and opinion about what's shaping Australia's mortgage and finance industry.
G'day, how you going? Phil Tarrant, co-host today of Broker Daily Uncut. They've dusted me off. Desperate once again for someone to come on this podcast. When I get the call up, I know they must be pretty dire in the world of mortgages, because one thing that we're all pretty knowledgeable and understand is that, number one, I get things typically wrong when it comes to mortgages, and number two, I normally frustrate and irritate people. So fortunately, I'm back standing in today for some of the team, joining the studio with Alex Whitlock, regular co-host. You probably know him from the other work he does in podcasting and mortgages, Business Accelerator program, of which I stood in, Alex, for a couple of installments. Welcome.
Muscling your way in.
Yes, I know. It's I get the call up for this type of stuff, and it's good because it makes me actually quickly have a look for 1 minute about what's been happening in mortgages. So therefore, I can make a ill-informed commentary about stuff that I don't know anything about.
Yeah, it's a definite downgrade from Eva, who does know her stuff, but unfortunately, because she's such a successful principal, she's away on an incentive with the team.
There you go. How important is it to celebrate success in mortgages? You've got to stop every now and then. It's a tough job, mortgage broking, from what I understand.
And it's, again, when do you go take your break? November's the middle of, I guess, sort of the end of year sort of writing season. You got the spring selling season going hard and fast. I know those guys have got a lot on, but you got to celebrate your wins when you get them. So, then now's the time they've gone away.
You speak to a lot of brokers, and if I sort of reflect back to the couple of conversations I had with Jason back on Business Accelerator when you were traveling, and I'm probably going to not remember this correctly, but we had a very good discussion around the future for mortgage broking, potential consolidation with mortgage broking, a shift to more salary-based brokers than sort of small single operators trading, and how that's going to shape and change things moving forward. But then we see some numbers coming out only the last couple of days where broker numbers are up to 22,000. So, I think back to my chat with Jason, I was like, are you going to have a smaller industry moving forward? You're going to have more smaller number of professional brokers who are salaried, or you're going to still have this big cohort of single operators out there. But 22,000, that marks a significant milestone for the industry, right?
So you got to look at it from the, I don't know, one way to look at it is the number of customers. Has that number of customers changed, marginally with, population growth in Australia? So you've got a couple of forces at play. One of them is the shift from bank branch lending to broker originated loans. And with now nigh on sort of 80% of loans going through that channel, you're not got a lot further to go. So are there more customers out there? I reckon the 22,000 brokers is probably at its peak. I don't see there being a need for a lot more brokers. Some could argue maybe you don't. You're probably a bit oversubscribed. You look at a parallel. You look at the kind of people that go into mortgage broking. I see most brokers on a par and a parallel with the skill set of an accountant. Very numbers focused, understand balance sheet, conservative. Generally, in the experience, look, I tend to, same as yourself, see the best brokers. I see brokers that come to our events and are a part of our awards, but they all have that commonality. I look at another burgeoning sort of area of the property ecosystem, which is the buyer's agent, and we're not going to go into that now. And they're exploding onto the scene, and the barrier to entry is zero for buyer's agents. And they're, because of the way that they're often wired, they're looking to have a crack at everything. Now, you've got exceptionally good buyer's agents, too many to list, Ross LeCain, Ben Kingsley, many others who also, Ross is a broker. Ben also, his business, involves advisory and all sorts of facets, including mortgage broking. But you've got a lot of players in that space that are very sales focused first, very good at winning business. They're entrepreneurial in their spirit and maybe not quite as sort of focused. And I think you're going to see some encroachment on the traditional broker through aggressive buyers agents looking to capitalize on more options once they've done that transaction. Can they dip a toe into the mortgage? I think you're going to see them going into, I think they're going to start challenging real estate because they sort of sit outside of real estate where they sit. They're not sales agents, they're not property managers, but they deal with both of those cohorts. So anyway, we're deviating a little bit away from mortgage broking. But
yeah, well, my it's funny you say accounting. My musings with Jason by memory was you're going to get a change in the makeup of brokers, and I subscribe to the point. I think you're topping out at 22,000 brokers, mainly because of what will be an erosion of market share from the major banks trying to do proprietary home loans, right? Like I think we're at the top of the curve in terms of saturation of broker originated loans. I think it's going to probably come back 4 or 5%. And that will therefore have a consequence if you don't need as many brokers in the market. But the point being is that I think you're going to start attracting a different cohort of broker moving forward, which is like an accountant. I go to university, I do something or other, I get some qualification, but I get an accounting degree. I normally go and work for an accounting practice. You know, not many people launch an accounting practice out the back of out of university education. They might do that some way through their career. So I think you'll start getting a growing cohort of brokers who either attracted into the industry through a different industry sector and or come up through educational ranks to become a mortgage broker, where they just become a salaried, probably the wrong language. They become a salaried mortgage broker, and that's the way it works. Where I think, and this comes back to 22,000, where the industry's got to get its head around is that there's still this incumbency around share of trail book. And one of the biggest issues the industry is going to have to grow and evolve moving forward is that if you have salary brokers, they feel as though, well, traditionally is that there's this idea that they share a trail book. They're growing some sort of equity in a trail book. When are we going to end up with a broker cohort which are just salary brokers? There's no contingencies on ownership of trail books, and they just are salaried and potentially bonus or commission brokers. I think on that basis, the industry's still got a long way to go around it. But back to the 22,000, I don't feel as though the industry needs more single operator mortgage brokers, because it's going to get so much more difficult to compete moving forward, and they're just not going to be viable businesses.
Yeah, I think it all depends on how you're wired, right? You know, from the outset, I think, you know, being going to broking and going out on your own and working off your upfront and your trail. If you are entrepreneurial and organised, and you have a plan, and you know where you're going, and you've studied the opportunities in mortgage broking, and you're going to go in a structured way, hey, you know what? You can build a very, very successful business. I think just turning up, and we see Finney that you know, they're salaried brokers. We see brokers coming along there that have had a go at going that path, and some ambitious brokers, they just can't. It doesn't matter how ambitious and hardworking you are. It's juggling doing the business of broking, building up your network so you can attract new customers in, having the marketing skill set as well. It's, you know, it's not just about going and working the networks like it was 20 odd years ago. Like, you've got to have a very, very solid digital and social footprint now to be current and attractive in the modern sort of media era. So it's a pretty complicated. You can be really, really good at broking.
Well, it's quite forgiving up until this point because broker market share has been growing for the last 20 years in lockstep with the demand and drivers from consumers for mortgage brokers. So it's been somewhat forgiving in that mechanically and structurally everything is growing. Now, if you hit to the top of the curve with broker market share and 22,000 brokers, you're not going to be finding new people to do mortgages for that used to just use a bank branch. Like, they're already using a mortgage broker. So you're winning market share off other mortgage brokers, and therein lies a challenge. Yes, younger cohorts can grow up with people, they can graduate with people, first-home buyers who you might be attracted to provide services for, and you can grow up with them as they go through their property journey. But it's going to be a lot more competitive broker to broker moving forward. Hence the reason why I think you're going to get a more professionalized broker, which is good. 22,000 brokers, I think it's a good milestone. Nice to market.
You're still seeing good well subscribed events for the Advisors New Broker Academy.
Yeah,
they you know,
it would be silly not to be attracking younger people.
And it's one of these things, right, where you've now got a mature mortgage broking industry. You know, it's been around. I mean, it's been around for, you know, you talk to some people, it's been around since the 70s, but really it's been around since kind of the mid late 90s. You know, and sort of really hit its straps in the 2000s. So you've now got, you know, people that are understand what mortgage broking is. They're not falling into it by accident. They actually want to become a broker. And the New Broker Academy is attracting a lot of new blood in.
Yeah.
And you're probably seeing the highest levels of attendance to that and the greatest interest from the industry in supporting it, because it's a very, very attractive way to sign up and attract new brokers if you're a mortgage broking business, or if you're an aggregator. Again, as you say, will it end up? How many of those brokers will realize that it's a tough gig running your own business? And there's two things, right? There's doing the broking bit, and there's being a business owner. So anyway, time will tell.
Time will tell, and you're seeing a lot more outside of it. You touched on it. This rapid increase of buyers agents. There's people doing buyers agent courses all over the joint. They're popping out of the shadows. But what they're soon finding, it's very different. Running a business, being a buyer's agent versus being a buyer's agent, just finding properties for someone else. So already you're starting to see changes to how that is going to be structured moving forward. But that's quite a lot for the first sort of installment of brokerdaily.au. We'll go to a quick break. Stay with us. Back in a moment. Welcome back. How you going? Phil Tarrant, Alex Whitlock. This is Broker Daily Uncut. Reading the papers over the weekend, Alex, and some commentary coming through. We've been chatting about this for quite some time, and I hate to say that typically our ramblings when things happen, and the great thing about podcasting is you get an idea, you can talk about it straight away, and it's just forgiving enough to say, yes, I got that right, or yes, I got that wrong. We typically get more right than wrong. We do sometimes get things wrong, but one thing I don't think we've got wrong is our initial commentary around the expansion of that 5% scheme for first-time buyers. Already over the last, you've seen, which come into effect in October, frenzy of activity, FOMO on the streets, everyone's concerning and worrying about missing out, got to get into it already. Last weekend, it's already subdued a little bit subsequent to the Reserve Bank Governor's announcement that inflation's on the up, and, don't just think that interest rate reductions are given.
No.
They've been, the Reserve Bank has been pretty considerate in this commentary, but reading through the lines, it's going to be steady as she go for quite some time, I think, before we're going to see any reduction in rates. And ... there may be.
Don't go down that path.
There may be. I'm just saying.
Don't be an opportunist.
So all of those first-time buyers out there scrambling to get in the market before they miss out, and then the realization of doing their sums and saying, oh, hang on a second, if I take on a 95% loan, that's a long time to be running a 95%. It's not guaranteed rates are going to be going down. So most first-home buyers typically buy the most expensive property they can,
but most buyers do that, right? And
that's fair enough.
It's rare that unless you've got a substantial portfolio and you're kind of cherry picking properties, you typically tend to buy the most you can afford. You know what?
I'm not saying it's a bad thing.
No. I'll never forget when I bought my place in 2012. When I moved down from Mount Coringon, I moved down to Pymble because it was closer to work. And I was going around looking at properties, and it was a kind of a low market at the time. And I went to go and see an agent. I didn't end up buying with the agent, and sort of, chatted away. And he said, and it was the market was in a low 2012. And I was sort of saying, oh, look, I'm looking around about the $1 million mark, which back then was a lot of money, an awful lot of money. And he said, he goes, buy the most expensive property you can possibly afford. And he wasn't trying to sell me his property because I made it very clear. But he was I was sort of just chatting away to him, obviously, through my interest with real estate business and Broker Daily and the advisor et al. And, smart property investment. And he went, buy the most expensive place you can afford, because the more you get your teeth into now, the more value it's going to have moving forward. And I looked at the difference. I paid $1 million for my place with the help of a buyer's agent.
Was that only $1 million?
Yeah, 4-bedroom house in Pymble. 4-bedroom house in Pymble, yeah. For those of you not familiar with Pymble, Pymble's on the Sydney North Shore. It's a fairly premium suburb. Yeah, I was sweating buying that place. I was worried about the commitment. I'd lived sort of regional, relatively speaking. But that was a big consideration for me back then. Anyway, tying it back into now, people tend to buy. You tend to buy the most expensive that you can possibly afford. So you stretch it, right? And then it's complicated now. Like back then, I say back then, but you're talking, 13 years ago, whatever, there were less things to be subscribed to. There were less external pressures drawing on your money. I'm kind of quite old fashioned. I look at, look at my mortgage debt and my ability to repay, and I'd got some investment properties as well. I think now, young people coming in, first-time buyers, they'd subscribed into every single kind of like internet streaming thing, plus games, plus this, plus that, because everyone's trying to get their hooks into you, bleed you, with subscription-based products. So it's, and if you manage to get the deposit together, whether you get help, even if your family helps you and lends you, an $80,000, deposit to get you in there or whatever it may be, you've got to service that loan. So you go grab as much as you can possibly get. I'll tell you, and because I'm looking for my daughter, for Liz, I think it's time that she bought somewhere, and I'm going to help her out with a deposit. But she's really limited by what she can manage to service. And she's concerned about it as well. Liz is quite old-fashioned. She's a bit of a tight ass. So,
But it's good that she's got that maturity. Whereas I don't think all younger buyers have the maturity. And I'm horribly generalising there, and I don't want to distress anyone or annoy anyone in particular, but this grant has been packaged as this panacea for solving the affordability things. The affordability crisis, right? There's affordability on how much a property costs, but there's affordability on how much you pay in order to service the debt against it. So all we've structurally done is told people, yes, you're going to buy a more expensive property because you can, and therefore the debt repayments are going to be higher. So rather than buttressing, affordability with a 20% deposit or even a 10% deposit, they're going to be up to the next for a long period of time. And I think moving forward, smart people will look back at this moment in time and look at this policy, and there'll be a lot of question marks put against it, because it will structurally lift housing prices.
Yeah.
It will structurally put more younger Australians into financial distress when maybe they don't actually want that.
Here's the thing, right? When you're a first-time buyer, you don't know, you can't conceptualize mortgage stress, right? It's a bit of a made-up term. It's been around for the last, I don't know, since the GFC. But look, there's no better term to kind of reference that constant pressure around your mortgage repayments. And if you've never had a home loan before, you don't know what that feels like. And, I'm kind of pretty used to it now. But I've gone through, and I'm sure, a lot of people tuning in and plenty of customers, that ever-present, pressure, particularly when rates either are going up or they're not going down. It just doesn't go away, and if you can feel the noose tighten, it puts pressure on you around work. You're not able to, you have to rethink about moving jobs. It puts pressure on you around starting a family or around a growing family. It's a big deal.
And I look at it in the way of winners and losers in relation to this policy. And I'm generally trying to work, I think there's the winners will be the system. The winners will be people who already own property. The winners will be the financial institutions. The winners will be the government, because they seem to be providing insights into it. But you look at the second, third, and fourth factor impacts of this policy. You're talking about, people may delay having children as a result of this because they've got financial pressures. I don't know whose interest that is. It's certainly not Australia's interest. We're trying to get, growing population, right? So it'll get pulled apart at some point. Someone will do a smart PhD on it, and they'll tell you all the things that are right and wrong about it. But I think in the balance of things, I reckon there are more appropriate policies that could be put in place in lieu of something like this. But that's outside my jurisdiction and pay grade. We'll go to a quick break. Stay with us. Back in a moment. Welcome back. Broker Daily Uncut. Phil Tarrant, Alex Whitlock. Now, I have on good accounts, Alex, that the major banks are engaging mortgage brokers. There are senior people at different banks looking to cozy up a little bit to mortgage brokers and get to understand a little bit more about them and outreach and all this sort of stuff. I'm not going to talk specifics here. I'm going to talk generally.
I might be, adding up, the wrong numbers, getting the wrong result here. But, Macquarie Bank, as well documented on this podcast and elsewhere, pulling back from lending into trusts, citing, some of the stuff that's going off on social media as being, to blame for that. But there was an announcement came out. I saw a media release come into my inbox about Macquarie yelling and screaming about supporting brokers and beating their chest over the significant share of loans that they're getting through the broker channel. I wonder if there's a correlation, with that pullback. Maybe not. I could be imagining it.
Yeah, I don't know how. If you look, hard enough at all the different things happening. You can,
but there was
certainly
there was a
draw.
release came out, and of course Macquarie, that is their primary source.
Well, I actually spoke to some, I would say, very senior mortgage brokers in relation to the Macquarie use.
I don't want to go back down. We've done this to death.
But this was only a couple of days ago, and they were like, "Yeah, thank God that happened." Like and it sounds as though certain sectors of the industry were maybe supporting the narrative around it and trying to shape change. And I think it's important for this industry, and when you look at the sort of the property economy, the property advice economy, mortgage brokers and financial planners and buyers agents and all and sundry, I think self-regulation is important. And the mortgage broking industry, because it has its bodies, membership bodies, and brokers operate under a code of conduct. They're supposed to do certain things. But I think it's prudent for self-regulation of certain practices that happen inside of property industries to happen before it actually gets regulated. And the long arm of regulation in Australia and bureaucracy, Australia can be horribly bureaucratic. And when the powers that be need to start influencing outcomes and shaping the way in which industries are structured, things have gone wrong. Now, I think this Macquarie Bank sort of pulling out of trust-based lending is a degree of self-regulation.
Yeah, they're not the only ones.
And there are other lenders who are making it significantly more difficult, right?
And there will be lending in that space. It's going to lend itself as you would naturally.
There will be innovation on the other side
to the non-bank sector. So there'll be a gap. It's just that you got mainstream lenders moving away from that for their own reasons. And I think I'm not on social media. I can't stand the thing myself. So I'm not on Facebook. I'm not on Instagram. I'm not on TikTok or anything. Or I'm not even on LinkedIn anymore. So I don't get the flows of babble from buyers agents and the yelling and screaming about putting people into unsuitable structures.
It is flows of babble. I think that's well framed. So what I would caution the buyers agent industry is to look to more mature markets and mature industries in and around property investment advice and learn from what's happening in those. You do not need government regulation.
Telling people that they can borrow unlimited amounts by taking on a particular structure rather than looking at your ability to service loans is highly irresponsible.
Well, there's certain industries, some of them complicit, some of them completely against it. You go and speak to accountants, and there's certain cohorts of the accounting sector who are absolutely livid, right, with aspects of the accounting profession who are tied up with this.
Align themselves.
Where a buyer's agent go, I'll go and see, Smitho's accounting. He'll sort you out. Don't worry about it. He'll write you a letter and satisfy all the needs around your trust being neutrally or positively geared, so you can continue to borrow. There's a lot in this.
It's a perpetual challenge around responsible lending and responsible borrowing.
Yeah.
But here's the thing: if I'm not an educated borrower and I get told by somebody I trust that this is the structure I need to go into, and if an advisor advises me that that's the right way for me to go, and I trust them, then I take that on board. Then the next thing, I find myself in trouble. And I find myself in trouble because either now, interest rates have gone up and suddenly the noose is tightened around my neck and I've actually borrowed more than I should do for my property portfolio. We don't see it here in Australia a great deal, but I've certainly seen it in the States and I've seen it in the UK where people end up in negative equity. And this is I guess a colliding of factors around property values coming down, which does happen in Australia in pockets, but you haven't had it happen wholesale, and interest rates going up, and I've got friends in the UK back in the 90s who homeless, because they couldn't meet their repayments and then the value of their property was less than the loan they had against it.
Yeah. Well, there's
I'm not being a doomsayer.
No, but there's aspects of this burgeoning buyers agency space where
lots of good buyers agents. Hey, listen,
absolutely.
I use a buyer's agent.
Yeah,
I use a buyer's agent for every purchase. This isn't any slur.
But back to the consumer. The consumer, I would say, be careful who you choose to advise you, right? Because I know of buyers agents. Some of them have been obviously propagating these ideas that the Macquarie's jumped on and the other industry will around trust-based lending, they'll go, you go and see that broker, he'll sort you out. Go and see that accountant, he'll sort you out. And sometimes the professionalism of those accountants and accounting practices and those broker practices are questionable.
And you get it in every sector, right?
Absolutely.
Same with the lawyers, same with financial planners. And look, it doesn't matter what sector you look at, you're going to get fringe operators.
Yeah.
A lot of the stuff that I talk with Jason about is, I believe very strongly that brokers need to evolve into becoming advisors. And we changed the, we launched the advisor back in, 2000 and whenever it was, early doors, because of the belief around the value of advice. Now, there are things that brokers can and can't advise on and would need, a license to advise on certain things, but they can certainly advise around debt. And I think being a trusted advisor is the absolute foundation of being a broker, as well as organising the transaction.
I think it's the absolute foundation of supporting clients through a property journey.
And my brokers give me, my broker, and I've had different brokers over the years, but I've had good brokers over the years, and I trust them for advice. I always have done. That's why, it's why I use a broker.
So the pertinent point here, or the salient point, is for brokers out there: be careful who you hitch your cart to in terms of referral partners, because things can and do come downstream.
You don't want to find yourself in the paper.
No, you don't want to find yourself in the paper. But the thing is that you start down that process. If you start compromising your ethics to get a deal done, those things can snowball, and they can snowball rapidly.
I'll tell you, Phil, it's on its way. I've fought street fights with the Telegraph where they've been having a go at brokers. Like, we mobilise when the mainstream press starts having a crack at brokers. Nothing makes me angrier. But here's the thing, you've got this, there's just this swelling, growth in buyers agents. I've seen on a much smaller scale, there's some buyers agents out there, we're not going to mention any names, but doing the wrong thing, that find themselves in the paper. And to your point, as a broker, if you get involved with the wrong company, when things turn bad, you can find yourself, high and dry. You don't want to bring yourself, and you certainly don't want to bring the profession, as in broking, into disrepute.
Well, it's nice to finish on such a high note.
There we go. Sorry, being so negative there, but it's. I could just see what's.
What a great time to be a mortgage broker.
It's absolutely
brilliant time. 22,000. We're attracting more talent into it. It's good to hear that. The new cadres coming in is, I would imagine the broker joining the industry today is very different than the broker potentially joining the industry 20 years ago. Similar tent, similar drive, but it's certainly a much more professional
sort of
industry.
Really coming out of banking, I think, for the going 20 to 25 years ago.
Yeah.
I mean, you still got people coming out of banking, but I think it's an attractive, profession for people to go into. And I think it's good you're getting a different kind of person looking to go into broking. This is not the same attributes.
Well, signing off, but I'd like to spend some time understanding the machinations of asset sales of broker books and broker businesses moving forward. I think consolidation, large groups potentially consolidating and forming mega groups in terms of brokerages. I think there's still some way to go to shaping what that looks like. But transactional type deals taking place with sole operators who may have been operating for 20, even 30 years now, selling off their loan books. And I was chatting with the accountant just the other day, and he's talking me through some of the valuations he's seeing coming through. And I don't know whether it stacks up for me. Some of the valuations on loan books coming through.
Some are quite high these days.
Yeah, some are very high. So I really want to understand the mechanics of that. But outside the scope of that, for another time, thanks, Alex, for coming on. And remember to check out Broker Daily. .au for daily for what's going on in mortgages and how you can potentially shape and drive your business in the right direction. Thanks for tuning in. We'll see you again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.